Hello everyone and welcome to the Ticker.com's news channel on YouTube. On this channel, we review stock markets and discuss financial news, market trends, and economic data from Wall Street to Global Street. So let's get started. Wall Street indices resumed their upward climb after a private survey showed business activities expanded at the fastest pace in more than 2 years in November. The investor mood reversed sharply from the previous week on the optimism about potential interest rate cuts, stronger economic growth, and pro-business policies. Let us review key economic updates released this week in the US, Europe, and Asia as the euro drops to a 2-year low and the yen sinks to a level that is likely to spark another intervention from the Bank of Japan. We start with the US. U.S. existing home sales in October increased 2.9% from a year ago to a seasonally adjusted annual pace of 3.96 million homes. Existing home sales rebounded from a 14-year low of 3.8 million in September, and median home price increased 4% to $407,000, halting 3 consecutive months of decline. Home market activities have been subdued for several months amid elevated home prices, rising mortgage rates, and lack of availability of homes in major markets across the nation. New passenger car registration in the European Union increased in October after falling for 2 months in a row, driven by robust sales increases in Spain and Germany. Car registration increased 1.1% after falling 6.1% in September and 18.1% in August, driven by 7.2% increase in Spain and 6% rise in Germany. For the first 10 months to October in 2024, new car registrations increased by a mere 0.7% to 8.9 million vehicles, suggesting tough road ahead for several large automobile companies. Moreover, Chinese automobile companies are ramping up exports despite looming surge in traffic and setting up production facilities in the European Union. The EU trade surplus jumped to €12.5 billion in September from €4.1 billion in August, after shipments of machinery and vehicles rose and deficits in imported energy shrank. Annual inflation in the UK accelerated to a 6-month high of 2.3% in October from 1.7% in September, driven by a 5.5% jump in housing and household services, 4.3% increase in restaurants and hotels, and 5% rise in prices for services. However, food inflation was steady at 1.9%, and annual core inflation, which excludes volatile food and energy prices, accelerated to 3.3% from 3.2%. UK retail sales declined in October amid broad weakness across all sectors. Retail sales declined 0.7% from the previous month in October and fell at the fastest pace in 4 months as improved weather and end-of-season discounts pulled sales from the previous 3 months. On an annual basis, sales rose at a slower pace of 2.4%, following a downwardly revised 3.2% rise in September. The annual rate of consumer price inflation in Japan eased to 2.3% in October from 2.5% in September. The overall inflation dropped to a 9-month low, and core inflation fell to a 6-month low of 2.3%, down from 2.4% in September. The overall inflation eased after the effects of the ending of subsidies for electricity prices waned, and prices rose at 4% compared to 15.2% in the previous 2 months. Still, overall and core inflation may support the case for the Bank of Japan to increase rate at a slower pace as consumers battle higher prices amid weak wage growth. In other economic news around the world, U.S. housing starts and building permits declined, but completions rose in October. Single-family housing starts fell nearly 8% in the South amid disruptions from hurricanes and rising inventories. Eurozone business activities unexpectedly contracted in November. The latest business survey showed contraction in the service sector activities for the first time in 10 months, aligning with the ongoing downturn in the manufacturing sector. Poor business momentum in France and Germany dominated the overall business activity weakness in the Eurozone. Switzerland's goods trade surplus soared to a record high of 6 billion Swiss francs, up from the revised 4 billion Swiss franc in September. On a monthly basis, seasonally adjusted exports surged 10% to 24.4 billion Swiss francs, driven by sharply higher sales of jewelry and watches, vehicles, and pharmaceuticals and chemicals. Japan's manufacturing sector contracted for the fifth month in a row in November, but the services sector activity slightly expanded. Let us review key events in global bond, currency, and commodity markets last week. The yield on the 10-year U.S. Treasury hovered at 4.45% and hovered near a 5-month high as investors factored in fewer rate cuts than previously estimated after the latest economic data showed strong private sector growth. Texas crude oil prices increased 5% to $71 a barrel on the expectations of a recovery in demand and further supply risks. Natural gas prices in Europe rose to a 2-year high of 47.50 euro per megawatt hour amid an ongoing contract disputes between Russia's Gazprom and Austrian OMV. The euro hovered near a 2-year low of $1.04 after the latest data showed weakening business activities in the currency union. Yen stabilized just over 154.75 against the dollar after headline inflation dropped to a 9-month low and manufacturing activities contracted, but the service activities expanded. We now shift our attention to major stock markets in the U.S., Europe, and Asia. The S&P 500 index and the Nasdaq composite advanced 1.6% after business activities expanded at the fastest pace in nearly 30 months. European markets halted a 4-week decline despite the weakening business activities and rising geopolitical and trade tensions with the U.S. and China. The Nikkei 225 stock average declined for the second week in a row as Prime Minister Shigeru Ishiba's administration prepares for a $90 billion stimulus package. Hong Kong and China indices extended losses amid rising worries about slowing economic growth and looming trade tariffs in the U.S. and the European Union. Indian market indices rebounded sharply despite the U.S. indicting the billionaire chairman Gautam Adani of the Adani Group. Let us shift our attention to merger deals, market movers, and earnings updates from leading companies last week. Nvidia, the advanced chip maker and the leader in the artificial intelligence chip, reported strong quarterly results but fell short of the highest revenue expectations. Snowflake jumped over 20% after the data analytics company beat earnings expectations for the third quarter. Intuit, the financial software developer, reported higher sales and lower earnings in its latest quarter. Dolby Laboratories soared 12% after the audio and imaging technology provider reported better than expected quarterly earnings in the fiscal fourth quarter ending in September. Walmart reported better than expected quarterly results and revised its annual outlook. Target Corporation plunged 19% after the discount retailer reported weaker than expected quarterly results and guided a cautious outlook. Lowe's Companies, the home improvement retailer, reported better than expected quarterly results, but the company's negative outlook dampened investor sentiment. Gap Incorporated rose 15% after the specialty apparel retailer reported better than expected revenue and earnings in the latest quarter, and the company revised its full-year sales out. Ross Stores jumped about 10% after the discount retailer reported better than expected quarterly results. Comcast, the provider of cable television services and owner of several cable television channels, is planning to spin off NBC Universal cable TV networks, which generates about annual revenue of about $7 billion. Baidu, China-based search engine company, declined 8% after the search engine operator said revenue fell as advertising demand remains subdued for the third consecutive year. PDD Holdings, the owner of popular shopping app Temu, declined 10% after the China-based budget shopping app operator said third quarter earnings fell 22% from the previous quarter. The chairman of Adani Group, India-based sprawling conglomerate, was indicted in New York for his role in alleged bribery scheme in India by the U.S. federal agency and the Securities and Exchange Commission. In the holiday-shortened week in the U.S., FOMC meeting minutes, PCE inflation data, personal income and outlays figures, and second estimate on the third quarter GDP will dominate economic headlines. In Europe, preliminary inflation reports in the Eurozone, Spain, France, and the Netherlands are taking main focus of investors. In Germany, investors are looking forward to the release of retail sales, unemployment, and consumer confidence index this week. In Asia, investors are looking forward to the release of economic updates from Japan and India. Japan is expected to release a flood of economic data covering housing starts, retail sales, industrial production, and job market conditions. India is set to release its third quarter GDP growth data. You can review daily U.S. and global financial market news, stock movers, earnings releases, SEC filings, and economic updates on ticker.com and 123jump.com. You can find the latest financial books on Redera.com, keep up with financial industry events on eventsinamerica.com, review ETF and mutual fund performance and in-depth profiles on tickerfunds.com, and review market updates and stock movers in India on niveshak.in. This is all for today, and we will